Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 27th of April. All right, now just having a look where the currencies are. You're going to start to feel a little bit better now that we've seen a few of these pairs sort of top out, particularly Euro. Looks like it's found a bit of a top leading into the Fed now. But let's clear the screen. Now, this is where you're going to really sort of weigh up commentary versus actually what's going on. So if you have a look here, like the dollar, it's still in this short-term downtrend. The dollar Swiss is losing a bit of steam. Actually, as most of them are, they're starting to trade sideways, as you'd expect, leading into getting closer towards the Fed meeting on Wednesday. Now, dollar CAD, another little drop to the downside, sort of trading sideways down around 124 the figure. Well, oil's dancing around. If oil goes back below 60 bucks, you're going to expect dollar CAD to be higher. But the rest of these pairs, Aussie and Kiwi are still sort of tinkering to the top side, and there's no resistance on the Aussie and Kiwi till a little bit higher, right? But having a look at these charts, right, you generally think there's, okay, a bit of dollar weakness and dollar block strength, right? Even though like dollar sterling's trading sideways, the Aussie has been trading sideways a lot. It's just edged higher. But if you come back and have a look at the way the market commentary is, okay, dollar rises versus major currencies ahead of Fed meeting. Now, the dollar might be up about 5 or 10 points. So just don't read too much into that. What you're going to come back and do is reassess like what is actually happening across the board and what are the major pairs doing. Now, right now, as a snapshot, right, the dollar is going up and the dollar block is going down. This is part of the normal cycle from the North American session where the dollar goes down, the dollar block goes up, just following that usual trend. They don't just keep going down the same way. The key things to be looking at, right, is the equity markets. Equity markets, another good day. The bond yields, well, it's a little bit indifferent, to be honest. Okay, yields a little bit higher on some bonds and others a little bit lower. So no real distinct like direction coming from the US Treasuries like we saw in the last month or two. Currently, right now, we are seeing the US equity futures. Okay, they are in the black, or in the blue on my screen, but that means in the positive. But don't forget, look how the change here. The movement is minuscule, right? So it doesn't match up with anything. So if anything, the markets are sort of just flipping around the place. We are seeing uniformity on the moves against the dollar. That's nice. But really, where's direction coming from? Well, if anything, as I was just showing in the charts, it's pretty much stalled as we lead into getting closer towards the Fed meeting, right? So the dollar index, a good indication of really what's going on across the board, but mainly in what's happening with Euro. It's still in this downtrend. We've got a clear target here on the top side. Not so clear is the support level underneath this, right? That's why it keeps drifting lower every time it comes back and tests this trend line. So right now, like we're a good day and a half out from the Fed. What you want to be looking at is some of the odd events that can create a massive disruption to the market. And the BOJ rate decision, right? Generally speaking, nothing happens. There's no change of rates for eons. But you may get a surprise movement here. They're always talking about it, and it's pretty much unexpected. I mean, if you look at once again at the commentary, you can get a bit of a rundown of what the market is feeling. So the journos, they'll call up a number of different banks, get the general opinions across the board, and that's how they piece together the general expectations for outcomes around some of these meetings. And BOJ to predict weak inflation, pledge prolonged stimulus as COVID pain persists. Now, the only difference here that they always pledge prolonged stimulus. They've been doing that for 30 odd years. Inflation's always been weak for 30 years. The only thing is they've got new is this pandemic, which does seem to be a very big thing in Japan. And don't forget, we have got the Olympic Games scheduled. So can you imagine if there was a massive blow up in the pandemic and they cancel the Olympic Games again? That's going to be a massive blow to Japan, right? So anyway, that's something you've got to, that's left field, not expected, but we've got to sort of start to think that could come into play. So of course, the Bank of Japan is going to try and manage, like we're going to do everything we can, keep the ball rolling. Outside of that, when you come back and have a look at the key data here, right, there's not a lot coming out, okay, over the course of the day. If anything, keep an eye on that US, well, that's actually consumer confidence comes out, early, late in the day in the US. So keep an eye on that. And that's pretty much it. And then you got the lead into, Wednesday's trading where we've got Aussie CPI, a bunch of other things, but most importantly, the Fed meeting, right? The Fed outcome. So this is obviously the biggest event in the financial markets. The Bank of Canada has given us a bit of a tip on what they're going to do. No one expects the Fed to do what the Bank of Canada did. Most people think it's going to be a non-event, but for us, we're looking to see what impact it has on the dollar itself, what impact it has on the equity markets, and also the treasuries, right? This is where we can get the answers straight away. And they're not just the answers for the next 10 minutes, they're there for the next week, right? We should have hopefully direction if they give us something specific to look at. Outside of that, I think these markets are going to be fairly range bound, right? So if you are looking at specific pairs, look for the pairs that have got ideally a top and a bottom. So you've got sterling, it's trading in a big range, but we do have support and resistance levels now to work with. Same with the euro, right? I can't see anything going outside of these ranges ahead of the Fed meeting. So I think if you're looking for opportunities, probably keep a close eye on euro, sterling. Top side, dollar Swiss might be an option as well as the dollar index. I'll be leaving dollar Catalan, and Aussie and Kiwi. They're sort of in the middle of nowhere, so they're no real good to me at the moment. Dollar yen, well, it's going to be in play today with the BOJ. So I'd have check out your yen and the yen crosses. That's where let me just change screens and give you a look at those. That's where the main action is going to be, right? So if you're in the Asian session and you're looking for opportunities, well, there's no specific time for the release, but it might be worth you having a quick look across the board, across the yen crosses. And actually, you can see here, I haven't been paying too much attention to them. I've got trend lines all over the place, but refresh your charts. Ideally, what you're looking for is the currencies around the cloud, which is the most predominant factor during the Asian market, and it's not exactly close to any of them. So, you know what? The yen crosses may not be in play, but if the BOJ does something outrageously extraordinary, which I don't expect, then you would see something come into play. But I can't see that happening ahead of the, ahead of the Olympics and the final countdown, etc. They want things to be as normal as possible, and if anything, if they can clear up the COVID-19 issue, then that would be a great thing for Japan. All right, guys, that's it from me. Have a good trade day. All the very best. Cheerio.